Hello, I'm Emma Rappaport.
And I'm Lewis Jackson.
Welcome to Morningstar's Look Back on 2021.
And what a year it's been.
From GameStop to a new COVID variant and all the dramas in between. A boat stuck on the Suez Canal, a debt crisis in the Chinese property sector, and our leaders meeting in Glasgow for COP26 to tackle climate change.
And who can forget all the drama at the Fed? After more than a decade of trying to lift inflation off the floor, it's back with a bang, taking economists and forecasters everywhere by surprise.
We've collected a range of experts from across Morningstar to give their look back on 2021.
But first, let's walk through some of the content you loved most on Morningstar.com.
Turning first to international equities, these are the most searched international stocks on Morningstar Premium. Chinese tech firms Alibaba and Tencent floated to the top of the list. Over in the US, investors were interested in an almost $3 trillion company in Apple, but also the person of the year, Elon Musk and his company Tesla.
On the ASX, the blue chips dominated in a big year for dividends. We had iron ore miner BHP splashing cash left and right, while the big banks returned billions to shareholders in the form of buybacks and special dividends as they released the money that they'd set aside for bad loans due to COVID.
Turning to funds, thematic ETFs had a really big year on morningstar.com.au. We saw the ETFs battery, tech and lithium ETF float to the top of the list. That was followed by Magellan and a series of Vanguard index funds.
Among the most viewed articles on Morningstar.com included our Under the Hood series looking at popular ETFs and our explainer for the crisis at Chinese property group Evergrande and what it meant for Australian investors.
This year, you really connected with us through our podcasts and webinars. You tuned in to Mark and Shani's deep dive into a variety of ETFs. And on the webinar, you tuned in to hear Mark's discussion of whether or not markets are overvalued.
Okay, well that's enough from us. Let's turn to the rest of the Morningstar team and get their thoughts.
It was a much more comfortable year for the banks, but still not without its challenges. We have an effective vaccine, huge stimulus programs, kept defaults from rising. And that really was the main driver behind the bank's profits as a combined group, jumping almost 66% on last year. It does mask the ongoing pressure on margins, though, which did continue to build over the year as the ability to reprice customer deposits lower. It's been pretty much exhausted now. And demand for very attractively fixed price loans, that also weighed on banks' profitability.
It's been a really interesting year. I mean, I think it's hard to go past the rise of bulk commodities, so thermal coal, coking coal, and iron ore, and we've seen iron ore, go to record levels over 200, and that's kind of halved from those peaks, but we're still in pretty rarefied air, and that's obviously driven the share prices of the major iron ore miners. It's been interesting. Fortescue has kind of bounced back from those recent lows. I think the market is super enthusiastic about its green initiatives, move into hydrogen, but I think on that front it's just very, very early days.
The listed investment space continues to evolve, and a growing number of fund managers from Magellan, Hyperion, Antipodes and Fidelity have launched funds that are tradable both on and off market at the investor's discretion. In the listed investment space, we also saw a number of thematic ETFs launch, including a hydrogen ETF and a fintech and blockchain ETF. Finally, super funds continue to consolidate, and we saw a number of mergers close in 2021.
So in 2021, we saw the continuation of engagement with sustainability and in particular sustainable investing. Conversations between clients and financial advisors, between kids and their parents, sustainability just became mainstream, and we saw folks, really voting with their wallets. This Australian sustainable investing product set, it's effectively doubled in assets over the last 12 months, and we now have around $37 billion invested in Australian sustainable investments. So I think the mainstreaming of sustainable investing has really been a key trend for 2021, and I expect that to continue through to 2022.
Lots of developments in retirement policy in 2021, with a big focus on decumulation or spending money in retirement rather than traditionally the accumulation. And encouraging retirees to aim for a higher quality of life and changing a mindset from a saver to a spender. Remember, there are three pillars of retirement spending, which is the age pension, superannuation, and money outside super, including the family home. But the Retirement Income Review released this year claimed that people died with 90% of their assets that they entered retirement with. So the government is trying to encourage people to spend in retirement.
Well, 2021 was really a focus on rising inflation and central banks, and then in the middle of the year, the arrival of Delta, and then later in the year, the arrival of a chameleon-like virus called Omicron. Strangely enough, what has happened in 2021 is still going to be the major focus for 2022. Markets have had tailwinds, very, very strong tailwinds from very accommodative monetary policy settings by the central banks, and helicopter money from the governments as they tried to support and then stimulate their economies.
So in 2021, we saw practically everyone getting involved in the equity markets. So there was low yields from fixed income, obviously, as we saw, and it pushed a lot of investors to substitute portions of their portfolio into parts that are traditionally reserved for defensive assets, and they filled it with equities. We are seeing a rise in speculative behavior as well. So many of these investors have never been in a proper market downturn and seen it with SPACs and GameStop and AMC and NFTs. There's just a lot of speculative behavior going on in the market at the moment. They've had good tidings for the majority of their investing careers, but unfortunately that's not how the market works, and it won't continue to go up forever. So their behavior, which is not really long-term in nature, it's not really long-term investing behavior, during an inevitable downturn is something all investors should be wary of.
As we finish 2021, I think a lot of the long-term investors that I speak to are feeling a bit like I do, that things seem a bit precarious with the market. So we obviously have a pretty challenging environment. Interest rates are going up. Inflation doesn't appear to be transitory. We've got equity valuations as high as they've been in the past 70 years. We've got bond yields as low as they've been in the past 70 years. So yeah, as I said, it's a challenging environment. But the one thing that I would say is keep focused on your long-term goals. Make sure that you've established your goal, you know what you need to achieve that. And then finally, if things go south in 2022, if you're an older investor, remember that you've benefited from years of above average returns. If you're a younger investor, hang in there. Having a bear market in the beginning of your investing career isn't necessarily a bad thing in terms of compounding wealth over the long term. And more than anything, know that all of us here at Morningstar will be here to support you during 2022 and afterwards. I hope everyone has a great break over the holidays, gets a chance to relax, spend time with family, and we can't wait to engage with you again in 2022.
Any advice in this video is general advice or regulated financial advice under New Zealand law prepared by Morningstar Australasia Proprietary Limited and or Morningstar Research Limited without reference to your financial objectives, situation or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest. To obtain advice for your own situation, contact a financial advisor.